Good afternoon, everyone. Thank you so much for joining us today as we formally launch our Farmland Capital Investor Platform and Investment Opportunity in Sugar Creek Farm. Before we get started here, we have the following disclaimer to review with you all. Next is an introduction to the speakers we have today. Peppo, who will be running through the farm asset, is our Managing Director of Equity Investments. He manages the entire sourcing and diligence process for farmland investment opportunities and oversees our underwriting process. Peppo has spent the last 15 years investing in and managing farms, making over 30 investments for over $100 million. He has a broad background in farm ownership, management, and financial decision-making, and has built out our Farmland Capital offering for farmers. My name is Melissa Bermudez, and I run our investor platform here at FBN. I'll be your main point of contact for any questions you have with regards to any of our investment opportunities or the structure of Farmland Capital. My background's in finance. I began my career in investment banking on Wall Street and then shifted into making investment decisions as a research analyst on the buy side. Most recently, I was building out the strategy and operations for an agriculture startup. My role is 100% to be here for you as a resource and understand how we can help you reach your investment objectives. So reach out to me anytime. My email is right here. So I'm going to invite Peppo and I to turn off our videos for the rest of this presentation for now, and we'll come back for the Q&A. So here's what we're going to talk about today. We'll spend some time going through who FBN is and why we're doing this. We'll then go through the investment opportunity and leave time at the end for the Q&A session. Throughout this presentation, certainly feel free to submit any questions you have, and we'll go through as many of them as we can at the end. So to start off, who is Farmers Business Network? FBN has been around for 8 years now with a member network that is almost 50,000 members strong. We started off as a company bringing data transparency to the agriculture industry. And over time, our offering has expanded to encompass a full platform of options meant to help family farmers become more profitable. In that time, we've reached a valuation of almost $4 billion with investors that include Fidelity, BlackRock, and Google Ventures. We have over 1,000 employees and strong partners in ag that are helping us continue to grow our relationship with farmers and our impact. As many of you know, the work of a farmer has only become more difficult over time. In the past few decades, farmers have been increasingly squeezed by concentrated power across suppliers, buyers, financiers, and very relevant for us, landlords. This is why the mission of FBN has been so crucial and resonated across so many of our members. We aggregate the power of our member network in everything we do to put farmers first, delivering the best outcome for them so they can continue to feed our country. So here are some of the benefits we provide our members across our offerings in inputs, crop marketing and insurance, data offerings, and financing. This is best summarized by the quote on the right, that a farmer's goal is to continuously improve efficiency and profitability. And when they do that successfully, they're able to invest in their homes, their communities, and empower rural America. So obviously this is meaningful for the farmer, but why does this matter for you as an investor? We really strongly believe that the strength of our pipeline and investment opportunities is directly tied to the strength of our member base. The strength of our platform is what draws members to us and empowers them, creating loyal members that trust FBN for their core needs, which includes financing. That means better investment opportunities for our platform and better investment outcomes for you. This cycle is extremely important to us as we build out this platform. And we're deeply committed to building a platform that works across all our stakeholders and ensuring that this cycle remains balanced on both sides of the equations. So that means investors benefit from access to high quality agriculture assets, and farmers benefit from access to investors like you that believe in what we're doing and what they're doing as well. Lastly, on the FBN side is a bit more about the who behind that platform. You met Peppo and I, but we also have a full team here. The 6 are kind of the core folks around Farmland Capital, as well as a full team of loan advisors, underwriters, data scientists, and economists that help us all to source, diligence, and review the investment opportunities we bring to you, as well as provide research on farmland valuation and macroeconomic trends. And I really want to highlight the experience of this team because while FBN is only 8 years old, specifically, if you look at our loan advisor team, the industry tenure is 16 years of experience in agriculture lending. Similarly, the loan underwriting team, the folks that are helping to diligence each opportunity, is very experienced. And we're really proud to bring that kind of expertise and knowledge to the platform. So now I'll pass the mic to Peppo to run through the farmland asset class.
Thanks, Melissa. So starting with why farmland? Farmland is the most essential asset that there is out there, is where our food is produced, and not just food, like food, fiber, and a big part of the fuel that we consume is produced by the land. And if we look like in the last decades, the pressure on farmland has been increasing. Like as population grows and the demand for food, feed, fuel, fiber increases, there is more pressure put on every acre that produces crops globally. So there has been a 49% decrease on the acres available per capita since 1961. And that trend continues with population growth. There is more pressure and at the end of the day, more value put on each acre. And if we look historically, that has resulted in very attractive appreciation for farmland. Farmland has appreciated over the last, like forever, basically. But if we look back at the last 80 years, it has appreciated an average 5.9% year over year, compounding at that rate over that time. Which is a very attractive rate if you compare that with gold, silver, even the S&P 500, like the largest companies in the US. The returns of farmland, when you look at the annual income, the appreciation has been really attractive. And at the same time, like farmland being such an essential asset, provides lower volatility and risk than other asset classes. If we compare farmland with the stock market, we see that the stock market, every time there was a recession or some like more volatility in the market, it suffered some drops. But farmland, even like people need to continue having food even during those times. So farmland has behaved really well in those situations. So that at the end of the day, what that means is that farmland has a pretty low correlation with the stock market. So it provides like that really sound diversification in a portfolio, and then at the same time, being in charge of producing food and essential assets is highly correlated with inflation. It's one of the assets out there that has the highest correlation with inflation. So yeah, there are several reasons why farmland has been historically a very attractive asset class, but also at the same time really hard to invest in. Like farms are really atomized. Like there are a lot of farms out there. Like it requires specific knowledge, and when you also buy a farm, you need to manage a farm. So that's why we came up with this model that gives investors access to that land in a really effective and an easy way. Melissa, yeah, turn it over back to you.
Thanks, Peppo. So now we're just going to talk about why specifically farmland from FBN. I know a lot of you are familiar with other alternatives on the market, so we want to dig a bit more into our structure. So back to the farming network we mentioned earlier, we really believe our structure is unique relative to any other farmland investment opportunity out there because of our access to this best-in-class farmer network that is bringing us their highest quality asset base. And the asset that Peppo is going to talk about in a minute, I think really demonstrates this. What is important to know about our structure is that the farmer retains ownership. That means it is a co-investment in the farm's equity, with both investors and farmers participating in the upside. It is strictly not a loan, and it is not a lease to farmers. And that means the farmer is maximizing their annual cash flow, which again, back to the farmer squeeze, is incredibly meaningful. Because of the structure, we also end up with a lot of deals in our pipeline that have never been sold on the open market. in this specific transaction that's happening. A lot of them are refinancings, or again, in the case of the transaction we'll talk about today, was a sale from one relative to another, which means that we are getting exclusive access to properties that wouldn't be transacting on an open institutional market. And that also means that they're usually very high quality. You can imagine in a world where a farmer needs to sell off a piece of their land to finance their operations, they'd be unlikely to part with their highest quality parcels. Because of this structure, you as an investor are gaining access to the land that would otherwise be unavailable to the institutional market. And lastly, again, we talked about FBN support. That extends to both the investor and the farmer side through the sourcing, underwriting, research, investment, and entire hold period. So to dig a bit more into how this works, I know there's a lot of information here, but it's the meat of the structure that we really want to make sure to communicate. So our process, which is led by Peppo from the sourcing perspective, includes sourcing the opportunities, structuring the investment, and syndicating them out to all of you. So we've spoken a lot about the specific advantages of our member network. We also want to be clear that doesn't mean we invest in everything that comes our way. We've chosen to invest in less than 5% of the opportunities that have been presented to us. And the assets we'll be bringing you all have gone through a rigorous process that assesses the cash flow generation potential, the opportunity for appreciation, and the quality of the manager. These are key pillars we personally use to assess farmland valuation and are also important as you make investment decisions. So we're happy to expand upon that further. From a structuring perspective, the farmer receives all annual cash flows and manages the risk of any short-term changes in commodity prices or weather risks. In exchange for the lack of cash flows, the investor participates in more of the appreciation of the farm value. This is through an option structure that we're going to dig into in a second. So that amount that the investor participates in is determined by a designated percentage, which is decided upfront and dependent on the co-investment value. This percentage will normally be around 3 times the percent of equity that the co-investment represents. In practice, this means that a 20% co-investment entitles the investor to 60% of the equity value at close. So when we talk about expected rates of return on investment, this is the main reason you'll see rates higher than the overall return on farmland of roughly 6%. The last part of the process is syndication, where we bring available investment opportunities to all of you. We plan to make these opportunities available for 2 weeks or as soon as they are fully subscribed. So of course, stay in touch with us to be updated of our investment opportunities. So back to the option. How does it actually work from an investment and return perspective? Here we have 2 bars. The first is an illustrative value of the farm at the beginning of the 10-year term. The bottom one is the value of that farm at the end of the 10-year term, at the time the farmer buys out the investor. At the end of the 10 years, with an average of the 5.9% appreciation per year, which is the amount we've seen from the USDA since 1940 on average, the farm is now worth about $160, gaining $60 in value. From the co-investment perspective, at the beginning of the term, the total debt on the farm is about 60% of the value. The equity is about 40%. And for simplicity's sake, the co-investment is half of that equity, or worth $20. Because of the option structure, that $20 co-investment entitles the investor to 60% of the value. That 60% is the designated percentage I mentioned previously. That also means the ultimate option cost is 60% of the current value at the beginning of the term, or $60. We want to minimize downside for investors, so only $20 of that full $60 is paid up front. Then at the time of buyout, the remaining $40 is due, which is the bottom red box. However, this is when you need to believe in the appreciation potential of the farm if you want to believe in the returns that we're talking about. Because that all-in investment of $60 in this case is what entitles you to a $100 value or a total gain of $40. The $100 payout on a total investment of $60 equals an expected annual rate of return of 13%, which we certainly believe is very strong. And to illustrate that, I'm just going to compare this to the other sort of farmland investment opportunities that are out there. This is another way to think about the return and the uniqueness of the model relative to those options. In many institutional investment opportunities, the return is calculated as the total expected appreciation plus the cash yield from the annual lease. As we just talked about, there is no cash yield, to be 100% clear, but the baseline appreciation, based on the structure that we talked about on the prior slide, means you're getting an annual rate of return of 13%. And so I want to stress in both these cases, you're assuming the same appreciation rate of 5.9%. And obviously, we've talked a lot about the difference between our platform and other institutional offerings. The main one being that farmers continue to own the land and they're invested in it for the long term to pass it on to the next generation. So we certainly believe there is upside to that appreciation in our model, just by asking ourselves, what do you have to believe about the appreciation potential of the scenario on the right relative to a farmer who is just operating land through a 1 or 3 year lease? I do want to touch on our data science platform as well. It's been designed to harness the power of our member network's data, again, of those 50,000 members that are producing active and real-time data on their farms, in conjunction with publicly available resources to drive insights on farmland valuation, on productivity, revenue, and profitability, which are key factors that drive valuation. Our substantial investment in data is leveraged across the farming ecosystem, including in assessing land values, and that's something we plan to use throughout the hold period of our investments to keep investors up to date on how their investments are doing. And lastly, I just want to touch on some of the intangible benefits of our platform and your investment in farmer-owned farmland. A co-investment in farmland capital supports rural agriculture, keeping rural interests local. It helps new farmers buy land or maintain ownership in the family, again, thanks to the structure that allows refinancing, and allows farmers to consider practices that encourage sustainability because they're keeping their land for the long term. So with that, I'm going to pass it over to Peppo to talk about the specific farm opportunity.
Thank you, Melissa. So this time we're looking at this Sugar Creek farm. It's a farm that is located in the U.S. Corn Belt, the premier corn soybean growing area in the world. This farm is located in Illinois, most particularly, and has some of the best soils in the region. So it's like one of the best farms in one of the best regions globally. Has been on the same farm in family for the last seven decades. It's one of those crown jewels that that typically do not get traded in the open market, that get kept within the family. And in this case, with this co-investment, we help the farmer to keep it in the family. This investment was closed a few months ago, so it's currently offered at cost to investors, which means it's offered below market values, and it allows investors to participate in 64% of the change in value of that farm going forward. The offering size is $518,000 with a value per acre of $12,200 an acre, which is below current market values in the area. It's a farm that has been used mostly to grow corn and soybeans, and where the investor return, the target investor return based on the historical appreciation of farmland since 1940 until today, it's 12% net, which is also in line with the farmer's return. The term of this investment is 10 years, but it can be shorter if the farmer decides to buy this out earlier than that. This, Melissa, can you move to the next one? So in the next one, we can see like how the farm performs relative to the area. If we look at this is the county yields and how does the farm compare to the area. So we can see like in corn, it trends above the area, and in soybeans it's totally off the chart. It's one of the very best farms in the region. So in terms of valuations, the fact that investors are getting in at a discount provides downside protection because it provides a buffer, and then it improves the returns, giving more upside to the investor. Based on the historical land appreciation, we're looking at a 12% return. If we look at more recent appreciation, the appreciation of the last 10 years, we're looking at a 13.6% return for the investor. And if we look at like in periods with higher inflation, we'll be looking at a 15.6% return. This was like in the 70s and early 80s. And if we look at periods with more moderate growth, this could for example, like from 85 to 95, with a 2.8% land appreciation annually instead of 5.9, we're looking at 7.4% IRR. In terms of the main metrics of this farm, like each the minimum investment ticket, it's $12,449 out of the total of $518,000. There's manual expenses here to maintain the farm and management fees and a profit participation that aligns management with the investors. So in summary, this Sugar Creek farm allows investors to invest in one of the premier agricultural areas globally, in one of the highly productive and one of the best farms in that area that has been performing well above average. At an attractive value due to the timing of the investment, and with a deal structure that allows investors to participate in an accelerated manner in the appreciation of the farm, which is one of the most attractive parts of the returns of farmland. So with that, we will turn it back to you and see if you have any questions or comments. Happy to answer any.
Great, thanks, Peppo. So yeah, with this webcast, we're now launching the investment in the farm. So anybody that is interested in investing or has any further questions, you can certainly reach out to me. I'm just seeing for some reason that phone number is not showing up, but I'll certainly get that out to folks via email. That is my email there as well. And if you have any emails from me, you can actually see my phone number in the signature. We'll keep this open for 2 weeks. So that's by Thursday, September 29th. We are coming out here with one of our strongest offerings here, and we really do expect some pretty strong interest. So if you are interested, please let us know as soon as possible and we can get the process started. So I'm gonna start my video again and start taking some of these questions. One of the first ones here is, why did you choose this kind of option structure? Peppo, do you want to take that one?
Yeah, absolutely. So one of the reasons why we chose these is because it allows investor and farmer to participate really on what they desire the most in farmland. The farmland has like the annual income and has like the annual appreciation too. Historically, like most of the returns have come from the annual appreciation. And investors that have like a more longer term and more patient can really benefit from participating in an accelerated way in the participation, and the farmer gets to have a little more flexibility on an annual basis by not having to share that cash flow and keep all that cash flow. So at the end of the day, like it gives each one what is most important for them. And then the other reason is this structure allows investors to participate with farmers that already have the farm or that are being transferred within the family in a way that is tax effective for farmers. So it really opens possibilities to a much wider set of farms available.
Great, thanks, Peppo. Another one here is, what does your pipeline look like? If I want to invest a bit of money, should I invest all here or should I wait? I'll talk a little bit about that, and then Peppo, I'll turn it to you to maybe talk about our pipeline a little bit more. So we're here launching this deal now. Our expectation is through the end of this year to be able to launch at least one deal per month, if not more. But generally speaking, so obviously our minimum investment size in this deal is about $12,500. So it certainly depends on the amount which you're interested in investing. We definitely recommend diversification across geography and across crop types. And Peppo can speak a little bit more to that as that he's doing that same kind of work as well. as he builds the pipeline and decides to invest in deals. So certainly up to you, and certainly something I'm happy to talk about more on a case-by-case basis for sure, but that's our general recommendation.
Yeah, in terms of pipeline, we're leveraging FBN's network with over 50,000 farmers covering basically every state in the US. So we get access to a wide variety of farmland opportunities, and we screen those to get farms that have really long-term sustainability. These are farms that are going to be producing for the next 100 years and are like among some of the best in the area, and also have like good appreciation potential. So we currently have a pipeline, a very strong pipeline of farms that we would be offering over the next few months.
Great. Why do farmers choose this type of financing relative to other options on the market? Peppo, do you want to take that too?
Yeah, sure. So one of the things that makes this attractive to farmers is the possibility of having some type of financing that doesn't have any annual payments, and that it's totally aligned with their wealth. So if you think on a farmer, like the alternative he has is taking debt, but that can only get him midway. Like basically, if a farmer wants to buy a $1 million farm, he can only get $600,000 from the bank, sometimes $500,000. So he has to come up with the remaining capital. With this, he can invest alongside investors, having a farmer a majority stake on that, having more skin in the game than investors. And that allows the farmer to secure that farm and like make its livelihood out of that farm. And at the same time, like the investor gets the chance to participate in the appreciation of that asset going forward. So yeah, it's the fact that it can provide capital in addition to that, and the fact that doesn't have like these annual payments that gives the farmer more flexibility. And the farmer is fine giving away part of the appreciation because he's more concentrated like in the cash flowing things in the shorter term.
Great, thanks. So we have one more question here and a comment. So if there are any more questions, for sure, get them in before we wrap up here. One of the last questions here is just in terms of steps that happen, how do I actually commit and what happens after that? So as I mentioned, if you are interested in investing, definitely reach out to me via email. We'll have a few processes that we'll need to go through, which include getting you uploaded into our system to verify your status as an accredited investor. You will get in touch with our lawyers for the investor signature package and receive access to any of the forms and files that you'll need to sign to participate. And then also you'll get instructions for wiring money to our corporate treasury account, which is a specific account devoted to this LP. If there's any further questions on that, I'm obviously happy to run folks through that in more detail, as it will be a little bit of a back and forth, but you'll get your investment in the end. And lastly, the comment here, which I think is a great comment and super valid in terms of the depreciation in available farmland compared with population, is just a call out in terms of the improvement of yields over time, which I think is certainly valid in the sense that it's actually, if you want to maintain any faith in humanity, is look at a chart of yields on crops over time, because it's pretty inspiring to see the ways in which we're able to continuously produce more with less. That being said, we still need more, and there is still a decline in farmland. And to me, that is part of the long-term thesis of farmland valuation and farmland appreciation over time. And it is this type of asset that is going to become productive over time. It's, again, one of those things that is part of the screening process for our diligence team. So Peppo, I don't know if you want to add anything else there from a supply-demand perspective.
But yeah, no, I think you covered it. It's like what the decline here is in farmland per capita, which is driven by two things. Like in some like farmland is declining in several areas due to urbanization and growth. But the biggest factor here is like more people in the world. So it's like the denominator of that equation has been changing really rapidly. And that has forced farmland to be more productive and at the end of the day to be more profitable.
Great. Awesome. Well, again, thank you to everyone for your participation, your interest, your questions. We really appreciate it. And just get back to me with any questions or feedback you have. We're really excited to hear from you guys and learn from you as well. So thank you so much and have a good rest of the day.